Hi guys, this is Francis with Financially Flair. Welcome to another video. And in today's video, I want to ask you if you did invest in the Apple split or the Tesla split or any split at all. Now, when it comes to stocks, you have to be very careful. You have to know what you are doing. You have to understand what you are doing. You have to stick to your investing philosophy. And so today, I want us to talk a little bit about split and what it pertains to the average investor like you and I. Well, if you're new to this channel, please consider subscribing. If you are a returning subscriber, please, thank you so much for tuning in and watching this video. On here, we document, when I talk about we, I'm talking about Rihanna, my wife, and myself. We are documenting our financial independence journey, and we talk about everything concerning money, marriage, and so much more. So please consider subscribing. Give this video a thumbs up, because if you don't, YouTube doesn't show our video to anyone else, and this could be helping so many people. Tell us what you think in the comment section, so that way we can interact and engage. And also it gives us an idea of what content to bring to you going forward. So let's get into the video. Now, when it comes to stock split, companies want to raise more money. That is the bottom line. A company wants to raise more money because they need money. And at the current stock price, the average investor like you and myself are not likely going to buy the stock. Take this as an example. If I am selling a shoe for $2,000 and I'm selling the same shoe for $5, which one are you more likely to buy? I'm pretty sure it's the $5 shoe if you're getting the same deal, correct? It's the same with the split. So it's at $2,000. The average investor like you and myself, we are not going to be able to afford that. So the company comes and say, you know what? Let's split that into 4. If they split that into 4, that means it's now back at what? $500 each. So if you owned one stock for the $2,000, it's now going to be 4 stocks for the same $2,000. Does that make sense? I hope I didn't lose you there. It's still split into 1 to 4. So that means it's 4 times whatever it was, right? So 4 times 500, that gives us back the $2,000. So that means the average investor like you and myself will now be more likely to buy the same stock, but we can buy it for $500. And here's a trick. If I give you the same thing and I split it into 4, it's the same thing, right? So if you come in and you buy it, yeah, you have a fraction of it, so do I, but it doesn't make much of a difference. The main thing here is that the company still was able to raise more money for their business. That's it. And the mistakes I've seen people make is before the stock split, you see the stock go up so high because a lot of people are trying to buy it, and they push the price of the stock so high because, again, when it's split into 4, like in our example right now, they get to have 4 stocks instead of 1. And so they all rush trying to buy it, and that pushes the stock price higher. Now, when it eventually split, remember the stock is already up. It's already high. When it's split, a lot of people rush again to go buy because, yay, it's on sale. And that even pushes the price further high. And so now it becomes overvalued, overpriced. And what is going to happen is all those people who bought it before the split are going to make easy money, because remember their stocks got split into 4. So now they happen to have more shares. And people who are now coming in after the split are going to help inflate the stock price, because now when it was split at 500, now it's probably at $550, $600 because so many people are rushing to go get it. And so what you see happening is people come in, they make quick money, and boom, the stock has nowhere else to go because it's so high it cannot go up anymore, because people who bought before the split are just waiting for people who don't really understand what they are doing to come buy the split, increase the stock price, and then they sell and they make their money. And so the mistake people make is that they don't understand what they are doing, and so they buy the split immediately once the split happens, and the stock keeps going up. They are happy, they are excited, and all of a sudden the stocks just plummet. And this is where your investing philosophy comes in, which we'll talk about in another video. So if it's a good stock, if it's a good company that you are interested in, my recommendation, and don't forget, I am just a random guy on YouTube. I'm just giving you my opinion. My opinion would be that before the stock goes on for the split, just let it ride. Do not do anything. Once the split happens, do not do anything. At some point, that stock is going to come down. It's only bound to come down. Nothing can go up forever. And eventually that stock is going to come down because people are just trying to get that initial feeling, that initial reward that they got from it, and their stock price is eventually going to come down. And this is evident in the current Tesla and Apple split. You could tell the stock was up so high and now it just keeps going down. Why? Because people who got into it before and right after are just pulling their money out because they make some quick money. And that is why you should not touch a split immediately once it happens. Because if you don't know what you're doing, you don't have an investing philosophy, and you don't even understand the business of the company you are investing in, you are more likely to go ahead and then sell when it's going down because you are freaked out that it is going to go to zero. And that's just instinct, that's just natural. We all go through it. We don't want to lose money. Even more so, I think we bought it highly overpriced when it is just at the highest price possible. And so to see it go down, we can't help it that we sell. And this does not help. And so when that common saying of buy low, sell high, buy low, sell high, mostly it's buy high, sell low, because instincts wise, we can't just help ourselves. And that is why I think you should not be touching a split if you don't understand what you are doing. And if you are going to touch a split, wait. Just wait. Don't buy on a high. Wait and buy it at the right time when the stocks eventually resets and then rebounds and tries to go through that correction, because it has to go through that correction. And that's when you want to deal with a split, especially if it's a good company you are interested in, if it's a company you like, and before the split you just couldn't get into it because it was just so high. And that is how the average investor like you and I win. That is how we beat the market. That is how we are able to go against our natural instincts to want to get in when everyone is rushing to go in, and just wait. And that is all a value investor does. They just wait and then pounce at the right time. So I hope I was able to give you some value. I hope you enjoyed this video, and if you did, please give it a thumbs up. If you have any questions, any comment, please put it in the comment section, and please consider subscribing if you are new to this channel. Like I said earlier, on this channel, Rihanna and myself are documenting your financial independence journey, and along the way, we want to teach and help you also to start your financial independence journey, because time is our most valuable resource, and we are trying to get ours back, so that way we can do whatever we want to do. I did a video on that, and so if you want to take a look at why we are pursuing financial independence, our why for that, please go ahead and check that, and I'll do my best to link that to the video as well. Once again, thank you so much for watching, and I will see you in the next video. As always, keep up with Financially Flair, because we'll get you financially there. Bye.